Gold versus silver investment 2026. Where should you invest your money? If you're watching this video right now, you're probably confused about where to put your hard-earned money because the precious metals market has been absolutely crazy in February 2026. Gold prices have crashed, silver has dropped dramatically, and everyone is asking the same question. Should I buy gold, should I buy silver, or should I just stay away from precious metals completely? Today, I'm going to give you real data, authentic market analysis, and help you make the smartest investment decision for your financial future. Stay with me till the end because I'll reveal something that most investors are completely missing right now. And this could be the difference between making massive profits or losing your money. Let me start with the shocking truth about what happened in the last few days. On January 29th, 2026, gold was trading at record highs around $18 per ounce. Silver had reached an incredible $120 per ounce. Everyone thought precious metals would keep going up forever. But then February arrived and everything changed. As of February 2nd, 2026, gold crashed to around $4,781 per ounce, and the latest data shows it's now trading around $4,665 to $4,879 depending on the futures contract you're looking at. That's a drop of over $500 in just a few days. Silver crashed even harder, falling from $120 to around $81 to $88 per ounce. That's nearly a 30% crash in silver prices. Some traders lost their entire investments in just 48 hours. This wasn't just a small correction, this was one of the biggest crashes in precious metals history. And you need to understand exactly why this happened before you invest even a single dollar. Now, before we go deeper into the analysis, this is Khan Invests, your trusted source for smart investment strategies and real market insights. If you want to stay updated on gold, silver, stocks, crypto, and everything that can grow your wealth, make sure you hit that subscribe button and ring the bell so you never miss an update. We're building a community of smart investors here, and I want you to be part of it. Now let's understand what's really happening in the gold and silver markets and where you should put your money. The first question everyone is asking is, why did gold and silver crash so hard? There are three major reasons. Number one, profit booking by big institutional investors. After gold gained over 106% from January 2025 to January 2026, reaching from 81028 rupees to 16,795 rupees in the Indian market, many large investors decided to lock in their massive profits. When institutional money exits, retail investors panic and start selling too, which creates a domino effect. Number two, global economic data changed expectations. Recent economic reports from the United States showed stronger than expected job numbers and slightly lower inflation readings. This made investors think that central banks might not cut interest rates as much as expected in 2026. When interest rates stay higher, the dollar becomes stronger, and gold and silver prices typically fall because they're priced in dollars. Number three, technical selling triggered stop losses. Many traders use automated systems that sell their positions when prices drop below certain levels. When gold dropped below $5,000, it triggered thousands of these automated sell orders, which pushed prices down even faster. This is what we call a cascade effect in trading. But here's what most people don't understand. These crashes are not always bad news. In fact, they can be the best buying opportunities if you know what you're doing. Let me show you the bigger picture with real expert forecasts. According to JP Morgan, one of the world's largest investment banks, gold is expected to reach $6,300 per ounce by the end of 2026. Think about that for a moment. Gold is currently trading around $4,700 to $4,800, and experts are predicting it could go up another $1,500. That's a potential gain of over 30% from current levels. Some analysts are even more bullish. The LBMA forecast survey shows that gold could trade anywhere between $3,450 on the low end to $7,150 on the high end by the end of 2026. One analyst, Nikki Shields from MKS PAMP, predicts gold could reach $5,400. These are not random guesses, these are carefully researched predictions from professionals who analyze markets every single day. Now let's talk about silver, which is even more interesting. Silver has always been more volatile than gold, which means it can fall harder, but it can also rise faster. Currently, silver is trading around $81 to $88 per ounce after the recent crash. But here's where it gets exciting. According to the LBMA forecast, silver could potentially reach anywhere from $42 on the extreme low end to $165 on the high end. Multiple analysts predict silver will break through the $100 mark again in 2026 and could even reach $106 or higher. Some very bullish analysts, like those at Noble Gold Investments, predict silver could eventually surpass $125 per ounce in the long term. One particularly bold prediction suggests silver could even reach $150 or more if industrial demand continues to grow. Why is silver so promising? Because silver is not just a precious metal for jewelry and investment, it's also an industrial metal used in solar panels, electric vehicles, electronics, and green energy technologies. As the world shifts toward renewable energy, silver demand is exploding while supply is limited. Let me give you some real context about why precious metals remain strong investments despite short-term crashes. Central banks around the world have been buying gold at record levels. This trend is expected to continue in 2026 because countries want to reduce their dependence on the US dollar and protect themselves from currency fluctuations. India's economic survey noted that gold and silver prices may continue to rise due to sustained demand as safe haven investments amid global uncertainties. Inflation is still a concern in many countries, and whenever inflation is high, people buy gold and silver to protect their wealth. Geopolitical tensions around the world, including trade wars and regional conflicts, make investors nervous about stocks and bonds, so they move money into gold and silver. The US dollar might weaken if interest rates are cut later in 2026, which would automatically push gold and silver prices higher. So now the big question, should you invest in gold or silver right now? Let me break this down for you in the simplest way possible. If you want stability and lower risk, gold is your better choice. Gold has thousands of years of history as a store of value. It's less volatile than silver, which means it won't swing up and down as dramatically. If you're close to retirement or you want to preserve your wealth rather than take big risks, gold is the safer option. You can buy gold in the form of physical gold coins or bars, gold ETFs, which are exchange-traded funds that track gold prices, or digital gold through various apps and platforms. Based on current prices around $4,700 to $4,800 per ounce and expert predictions of $6,000 to $6,300 by year-end, gold offers a potential upside of 25 to 35%. If you want higher potential returns and you can handle more risk, silver might be better for you. Silver is currently much cheaper than its recent highs, which means there's more room for percentage gains. If silver goes from $85 to $125, that's almost a 47% gain. Silver benefits from both investment demand and industrial demand, giving it two sources of price support. However, you need to understand that silver can also fall faster than gold, so you need a strong stomach for volatility. You should only invest money in silver that you can afford to keep locked up for at least 1 to 2 years. Silver is great for younger investors who have time to ride out the ups and downs of the market. My personal recommendation, and this is what I do with my own money, is to have both gold and silver in your investment portfolio. A common strategy is the 70-30 split, where you put 70% of your precious metals allocation into gold and 30% into silver. This gives you the stability of gold plus the growth potential of silver. Another approach is the 60-40 split if you're a bit more aggressive. Some very aggressive investors even do 50-50, but I would only recommend that if you're young, have a long investment horizon, and can handle significant price swings. Never put all your eggs in one basket. Your precious metals should be just one part of your overall investment portfolio alongside stocks, real estate, and other assets. Let me also tell you about timing your entry. Right now, after this massive crash in early February 2026, we're potentially at a very good buying point. When everyone is panicking and selling, that's often when the smart money is buying. However, I don't recommend putting all your money in at once. Use a strategy called dollar cost averaging, where you invest a fixed amount every month regardless of the price. For example, if you have $10,000 to invest in precious metals, don't put it all in today. Instead, invest $2,000 per month for 5 months. This way, you'll buy at different price points and average out your cost. If prices drop further, you'll buy more at lower prices. If prices go up, you'll still have gained on your earlier purchases. Now, I want to share something really important that most investors completely ignore, and this is critical for your success: the gold to silver ratio. This ratio tells you how many ounces of silver it takes to buy 1 ounce of gold. Right now, with gold at about $4,800 and silver at about $85, the ratio is roughly 56-1. Historically, this ratio has averaged around 60-1 over the long term, but it has swung wildly from as low as 20-1 to as high as 100-1. Some analysts predict the ratio could drop to 20-1 in the coming years as silver catches up to gold. What does this mean for you? If the ratio drops to 40-1 or 30-1, it means silver is outperforming gold significantly. Many experienced investors watch this ratio and adjust their holdings accordingly. When the ratio is very high, they buy more silver. When it's very low, they buy more gold. This is an advanced strategy, but it can significantly boost your returns. Let me also address some common mistakes that investors make with precious metals. Mistake number 1, buying based on emotion. When gold hits a new high, everyone wants to buy it. When it crashes, everyone wants to sell. This is exactly backward. You should be buying when prices are low and selling when prices are high, not the other way around. Mistake number 2, not storing physical metals safely. If you buy physical gold or silver, you need a secure place to store it. A bank locker is ideal. Don't keep large amounts at home where they could be stolen. Mistake number 3, ignoring the purity and authenticity. Always buy gold and silver from certified dealers. Check for hallmarks on gold and purity stamps on silver. There are many fake products in the market, so be very careful. Mistake number 4, forgetting about taxes and fees. When you sell gold or silver, you might have to pay capital gains taxes depending on your country's laws. Also, if you buy physical metals, there are making charges for jewelry or premium charges for coins and bars. Factor these costs into your calculations. Mistake number 5, having unrealistic expectations. Precious metals are not get-rich-quick schemes. They're wealth preservation tools that can also generate good returns over time. Don't expect to double your money in 3 months. Before we wrap up, let me give you my final verdict for February 2026. Both gold and silver have strong fundamental reasons to rise in the coming months and years. The recent crash has created an opportunity to buy at lower prices than we saw in January. Gold is the safer choice for conservative investors and wealth preservation. Silver offers higher potential returns but comes with higher volatility. A balanced portfolio should include both metals in a ratio that matches your risk tolerance. Don't try to time the perfect bottom. Start investing gradually using dollar cost averaging. Stay informed about economic news, central bank policies, and geopolitical events that affect precious metals. Be patient and think long term. The best returns in precious metals come to those who hold for years, not months. Remember, this is not financial advice. This is educational content based on current market analysis and expert forecasts. You should always do your own research and consult with a qualified financial advisor before making investment decisions. Everyone's financial situation is different, and what works for one person might not work for another. If you found this video helpful and you now have a clearer understanding of where to invest your money in 2026, do me a favor and hit that like button. Drop a comment below and tell me, are you Team Gold, Team Silver, or Team both? What's your investment strategy for precious metals? I read every single comment and I'll reply to as many as I can. Also, share this video with your friends and family who are confused about investing in gold and silver. Knowledge is power, and when we share valuable information, we all grow together. Subscribe to Khan Invests if you haven't already, because I'll be bringing you more market updates, investment strategies, and financial education that can change your life. Thank you so much for watching, and I'll see you in the next video. Until then, invest smart, stay informed, and keep building your wealth.